everybody. Just a quick update to let you see how things are doing and some news that you may need to know that can affect your portfolio. So, first off, we've been doing the $5 challenge every day where we invest $5 into Bitcoin, Palantir, S&P 500 by SPY, and the SCHD index. We put $5 in each of those every day, Monday through Friday. As long as the stock market's open, we're doing that. And so we've invested $600 so far. Now, of those, everything's down, but SCHD is down the least. And again, after 6 weeks, I'm not terribly disappointed to be down, what's that? Less than $40. The lower it gets, the cheaper things get, the more we get. And then when things turn around, eventually we'll be up even better because of the daily dollar cost averaging of $5 a day. So this is the whole point of that is the dollar cost average is you buy it when it's up, you buy it when it's down. Eventually the S&P doubles every 7 years roughly. So hopefully these things will follow suit with the S&P and we'll make more money in the long term. But again, this is only 6 weeks of the year-long portfolio track that we're going to do. And we may even update it after the year hits. We'll see what happens. Uh, So, with that out of the way, let's discuss some things that you may need to know. Now, the Jackson Hole meeting went off, where JPOW basically reaffirmed their commitment to getting inflation down to 2%, and that they're going to do that basically in order to do it. A rate hike may be necessary, but it's not something that they're thinking is going to be done in September. Could be done, maybe they'll look at it in November. But what's really making it difficult is the staunch labor market, which is a really weird w- indicator because what'll happen is you can have the unemployment numbers dropping because people just stop looking for jobs and are no longer counted among the people off unemployment and or in the job market at all. So by saying that the job numbers are strong and stuff, it's not indicating that, people have stopped looking or just given up, which a lot of people have. And so the way that they report jobs numbers can be kind of misleading. I mean, it's better than nothing, but it's still not completely accurate. So as long as there's a belief that there's a strong growth in jobs and removal of people off of unemployment benefits, they're going to continue to try and pound that down by means of raising rates, which will create more inflation for banks. Well, not inflation, but will create bigger problems for banks as rates increase and they have all this money left out in loans at like 2 and 3%, and they can't collect on any more than that when there's 7% gains to be had. And all the money that they've loaned out, they're getting charged 7%. So that's kind of a big problem for them. We'll see how high rates go and what happens to the banks, and we'll see what happens with the housing market too, which is a big, big thing that's going to be coming up. As I said in one of the shorts, roughly $180 billion left in U.S. Holdings as far as people's savings, uh, and we're burning through as a country about $100 billion a month. So we have about 2 months before the average US citizen is going to run out of savings. And then they're going to be putting stuff on credit cards. They're going to be defaulting. They're going to be foreclosed on. There's going to be repossessions. So all of that is coming up probably pretty soon. And if that hits, that will be something that Jay Powell in the chair, the Feds have to look at as far as combating inflation and seeing the negative versus the positive impacts that it's going to have long term. This is a very fine line that they're trying to tread. It's difficult, I'm not gonna lie. And I'm always one of the believers in more of a hands-off approach because things have a way of just working out themselves and tend to correct themselves. So heavy-handed has never been my idea of the proper approach, but we'll see what happens. In other news, we had Nvidia just blow out their absolute destruction of earnings call. Better than anyone ever thought. They increased their guidance for the next quarter too. And because of this, a lot of other stocks that are in the semiconductor and fintech and uh, AI spaces just blew up alongside it after their earnings call. And then the next day, there was a correction to the downside for that. So it was short-lived, but it did happen. And now actually Nvidia is lower than it was uh, before the call, which is kind of funny because it's at 460 and before the call it was like 473 and then it shot up over 500. So always be wary because usually when things go up fast or down fast, there's a correction of some sort. So like when you saw Palantir shoot up from $14 up to $20 in the last month or two, and now it's back down to 14, it was to be expected. It's just hard. You can't time the market, and that's again why we do the $5 challenge and we do it every day. Now, this happened over the weekend, which is something that is a little worrisome for your gas prices as far as getting your car places to and fro. Uh, there was a refinery that's basically been shut down. I'm not sure if it's permanent, but this is the third fire they've had in a year, and they're shutting this down while they deal with that. So you can expect that your gas prices are probably going to take a lunge up after this weekend once this news hits, and it's just what they do, man. Like as soon as there's any whisper of an issue with gas or anything that refines it, they're going to start jacking up the prices. So you're going to see a $4. In some places, you already have $4 per gallon. I know here in New York, we're at 380, 390, and it's there. So super excited about that. Can't wait to pay more for gas. Hopefully, it's short lived and they get this online. But in the meantime, that's something you're going to have to look into if you're a futures trader or a commodities trader. That's information you'd want to know. Last but not least, one of our old favorites, Rite Aid, filed for Chapter 11 bankruptcy as they are being sued into oblivion by the opioid crisis and everyone who's suing about the opioid addictions. So they basically said, "Yep, we're closing up shop. Take our money, leave us the hell alone," and they will probably get their stores scooped up by Walgreens Boots Alliance or Amazon, someone at real cheap discount prices, and then they'll have actual pharmacies in specific areas. It'll be interesting to see what happens with the actual retail areas that Rite Aid had because it could go the way of just some of them just being closed up and done forever and rotting buildings, or it could be that one of these places that is doing financially stable, like a Walgreens or something, buys out those 400 locations, puts up new stores, and has an increased boon. But if Rite Aid wasn't making it work due to whether it be just shitty customer service or tons of theft, or which you've seen lots of videos, I'm sure, of California people just raiding pharmacies and taking everything in 7-Elevens, Rite Aids, all that stuff. And these lawsuits, all that on top of one another, it may be a thing where they shut down specific locations if they do buy out Rite Aid and just keep some things open, but they'll just put the new brand on top of it. Kind of like how Faze and Eckerd's used to exist, and then they got bought out by Rite Aid. So that's some news from last week that you needed to know, and update on the portfolio as well for 6 weeks in. And I hope everyone's doing well. Hope you're doing great. And if you have any questions or anything you'd like me to cover, I'm happy to do it. The week ahead, uh, we do our shorts every day. We'll do some quick updates on things that happened during the day, as well as the portfolio at the end of the day. So stick with those, and we hope to see you there. Thanks for watching.